Stop scrolling. This could cost you hundreds of pounds a year. If you were born before 1961 and you're receiving the state pension, there is something happening right now that most pensioners do not fully understand, and missing it could mean walking away from money you are entitled to. You may have heard whispers about a 562-pound figure, you may have seen headlines, or you may have been told it doesn't apply to you. But here's the truth. Many people are getting this wrong, and that confusion is exactly why so many pensioners are still struggling when help is available. In today's video, we're going to break it all down clearly, calmly, and in plain English. No jargon, no guessing, no false promises. We'll explain where the 562 pounds figure really comes from, who actually qualifies, what is automatic, what you must claim, and the one mistake that could stop payments without you even realizing. And most importantly, stay with us until the end, because the final section covers a step that thousands of pensioners skip, and it could be the difference between just getting by and getting the full support you deserve. So if this applies to you or to someone you care about, make yourself comfortable, because this information matters and it could make a real difference to your finances. Before you go, can I ask you one small favor? If you were born before 1961, or if you watch this channel for a parent, grandparent, or loved one, then this channel is for you. This is not a general news channel. This space exists specifically to explain state pension changes, DWP updates, and financial support for older people in clear, plain English, without confusion or scare tactics. I follow these topics every single day, and whenever the DWP, the state pension, or pension credit changes, I will upload a new video as soon as it happens, so you don't miss out on money or support you are entitled to. That's why subscribing really matters. When you subscribe, these updates come straight to you, without you having to search, worry, or rely on rumors. So if this information helps you, or protects someone you care about, please take 1 second to subscribe now. This channel is here for people like you, and I'll continue covering this exact topic, step by step, every time something changes. Hello everyone, and a very warm welcome back to the channel. If you or someone you love was born before 1961, and you are currently receiving your state pension, then today's video is absolutely made for you, because there is some genuinely important news coming directly from the Department for Work and Pensions, and we want to make sure you understand every single bit of it in plain, simple English. So please do stay with us right until the end, because there is a lot to cover and every part of it matters. Whether you are watching this for yourself, for a parent, a grandparent, or a family member, this information could make a real difference to your finances. So let us get straight into it. The Department for Work and Pensions, which most of us simply call the DWP, is the government body responsible for handling state pensions and benefits across the United Kingdom. It supports around 20 million people in this country, and when it makes an announcement, it is worth sitting up and paying attention. The DWP has officially confirmed a new financial support measure for state pensioners born before 1961, and this comes at a particularly important time when older citizens across the UK are struggling with rising living costs, including higher energy bills, food prices, and healthcare expenses. Now, you might have seen the figure of 562 pounds mentioned online or in the news recently, and we are going to explain exactly what that means, where it comes from, and whether it applies to you, because there is a little more to it than just one simple lump sum payment, and it is really important that you understand the full picture. The phrase 562-pound payment does not come from a single official DWP announcement of a brand new bonus payment. Instead, it reflects the approximate total annual increase that many pensioners can expect when combining different payments and uprates together. So, rather than one big check dropping through your letterbox or landing in your bank account all at once, what we are actually talking about is a combination of different elements of financial support that together add up to a very meaningful amount of money over the course of a year. One of the most commonly referenced elements is the annual state pension increase, which in some forecasts and headline figures is said to amount to an extra £562 over a year thanks to the triple lock guarantee. And we will be explaining the triple lock in detail very shortly, because it is one of the most important protections that pensioners in this country have, and not everyone fully understands how it works or why it matters so much. Now, let us first talk about who exactly this support is aimed at, because that is the question we know most of you are asking. The DWP has clearly stated that this extra support is designed mainly for older state pensioners born before 1961, meaning people who reached pension age before April 2027 are the primary group being supported. The government has made it clear that this payment is not a loan and not a replacement for existing benefits, but an additional financial support measure aimed at protecting pensioners on fixed incomes, especially during the colder months when household costs rise sharply. So, if you were born before the 1st of January 1961, you are in the age group that the DWP is specifically focusing on here, and that is a very large number of people across the UK who have worked hard all their lives and deserve every bit of support that is available to them. Many are surviving only on the basic state pension and have limited savings. As prices for essentials like food, heating, and rent have grown significantly over the past few years, thousands of pensioners are financially struggling. Research from charities such as Age UK shows that older adults, especially those over 65, face higher energy usage and more health-related living expenses. This is why the government has been under real pressure to step in and do something meaningful, and this financial support is part of that response. The DWP recognizes that people in this age group often have very little flexibility in their budgets, and when the cost of a weekly shop goes up, or when the gas and electricity bills spike in winter, there is simply nowhere else to turn if your only income is your pension. That is the reality for a huge number of people in the UK right now, and it is something that cannot be ignored. Let us now talk about the triple lock, because this is absolutely central to understanding the £562 figure and why it matters so much. The triple lock is a government policy that increases the state pension each year by whichever is highest out of prices, earnings, or 2.5%. What this means in simple terms is that no matter what is happening in the economy, your state pension will always go up by at least 2.5% every single year. If prices are rising faster, your pension goes up to match that. If wages across the country are going up even faster, your pension follows that instead. The whole point of the triple lock is to make sure that pensioners are never left behind financially, that their income keeps pace with the real world rather than falling further and further behind every year. The new state pension is set to rise in April 2026 to £241.30 per week at the full rate, and for many people, that weekly increase adds up to several £100s more per year landing in their bank accounts. When you add that annual uplift together with other payments like the winter fuel payment, you start to reach figures close to that £562 total that has been widely reported. Now let us talk about the winter fuel payment, because this is another key piece of the puzzle. The winter fuel payment can be worth up to £300, and when combined with the state pension uprate, that can add several £100s across the year. Many commentators combine these and similar supports to arrive at a £562 total support figure. But this total is made up of separate official elements, not a single new payment. So it is really important to understand that when you hear the number £562, you should think of it as the combined value of several different types of support, rather than expecting one single payment for that exact amount to appear in your account. Eligibility for the winter fuel payment normally requires that you have reached state pension age before the qualifying week in September, and either receive the state pension or another qualifying benefit. In many cases, if you already get your pension paid into a UK bank account, the winter fuel payment is paid automatically between November and December. If you did not receive your winter fuel payment by the end of January, then the DWP advises you to get in touch with the Winter Fuel Payment Center straight away to find out what has happened and whether your details need updating. Now, one thing that a lot of people are not fully aware of is the difference between the old state pension system and the newer one that was introduced in 2016. And this is particularly relevant for those of you born before 1961. The distinction between the old and new state pension systems is critical for pre-1961 birth cohorts. Individuals born before the 6th of April 1951 for men and the 6th of April 1953 for women are generally covered by the basic state pension rules. This structure is more complex and often includes components like the additional state pension, or SERPs. The new system, introduced in 2016, is simpler and based on a flat rate amount determined by national insurance contributions. For those falling under the older scheme, the full basic state pension rate for the 2025 to 2026 financial year stands at £169.50 per week. Many people in the pre-1961 age group will be on the older system, and while it can be more complicated to understand, it does come with those additional components that can actually mean more money in your pocket when everything is calculated together. The key to unlocking a lot of the additional support available is something called pension credit, and we really cannot stress enough how important this benefit is for older pensioners in the UK. Pension credit is considered the gateway to many financial support schemes, including the additional payment support that has been reported. Even a small award of pension credit can unlock extra benefits such as council tax reductions, free NHS dental checkups, free eye tests, and access to future cost of living payments. Yet, despite all of this, thousands and thousands of people who are fully entitled to pension credit are simply not claiming it. Many pensioners feel they may not qualify, but pension credit rules are broader than many people realize. The DWP encourages all older pensioners to check their eligibility, as even small savings and modest income levels may still qualify them. So please, if you have never checked whether you qualify for pension credit, do it today. You can do it online at gov.uk or by calling the Pension Credit Helpline. It could literally unlock hundreds of pounds of extra support that you are already entitled to but have never received. Pensioners who already receive one of the qualifying benefits will get additional payments automatically, without needing to apply. However, those who are not claiming any of the listed qualifying benefits must apply for pension credit or another qualifying benefit before the official deadline. Applying early is important because the government aims to process as many claims as possible within the payment window, so please do not put this off. If you think there is even a small chance you might qualify, pick up the phone or go online and check. The worst that can happen is that you find out you do not qualify. But the best that can happen is that you discover you have been missing out on significant money for years, and you can finally start receiving what you are owed. Let us also talk about how these payments are actually made, because a lot of people worry about whether they need to do anything in particular to receive them. In the majority of cases, pensioners do not need to apply for the additional payment. The DWP will process payments automatically using existing pension and date of birth records. However, pensioners who believe they qualify but do not receive the payment within the expected timeframe should contact the pension service. Keeping personal details, bank information, and contact details up to date can help prevent delays. This is really reassuring news for those of you who perhaps find it difficult to deal with forms and applications, because the system is designed to work automatically wherever possible. The payment will appear as a separate entry on bank statements, making it easy to recognize. Some pensioners may experience delays if their bank details or address information is outdated. So right now, it is worth just double-checking that the DWP has your correct bank account details and your current address on file, because something as simple as an outdated account number could cause a delay in receiving your money. Now, we also want to make sure we mention the changes happening to the state pension age, because this is affecting people born between 1960 and 1961 specifically, and it is causing quite a bit of confusion. The DWP has confirmed the phased move to age 67 begins soon. The 2026 shift sees the age rise from 66 to 67 starting the 6th of April 2026. The primary group affected is those born between the 6th of April 1960 and the 5th of March 1961. Anyone born between the 6th of April 1960 and the 5th of March 1961 will have a retirement age somewhere between 66 and 67. Anyone born after the 6th of March 1961 will have a state pension age of 67. The age increases by roughly 1 month for every month of birth within the transition period. So it is not a sudden cliff edge where one day everything changes. It is a gradual shift, and the exact date that your pension becomes payable will depend on your specific date of birth. The best thing you can do is use the State Pension Age Calculator on the gov.uk website, which will tell you precisely when you become eligible based on your birthday. If the increase to 67 feels out of reach due to health or financial reasons, you may not have to wait without support. While you cannot claim your state pension early, other DWP supports are designed to bridge this gap. Personal Independence Payment, or PIP, is available if you have a long-term health condition or disability that makes daily tasks difficult, and you can claim this up until you reach state pension age. Employment and Support Allowance, or ESA, can also help if a health condition limits your ability to work, providing bi-weekly payments and, crucially, national insurance credits to protect your future pension record. So even if you find yourself in the difficult position of having to wait a little longer for your state pension due to these age changes, there are options available that can help bridge that gap and make sure your national insurance record is kept intact. We also want to take a moment to talk about scams, because sadly, whenever there is news about pension payments or government support, the scammers come out in force. The DWP has issued a warning about fake texts and emails claiming to offer payments. Pensioners are reminded that the DWP never asks for bank details or upfront fees to issue payments. This is really important to remember. If you ever receive a text message, an email, or a phone call asking you to provide your bank details in order to receive a pension payment, it is a scam. The real DWP already has your bank details on file and will never contact you out of the blue asking for them. If you are unsure whether any communication you have received is genuine, always go directly to gov.uk or call the official DWP helpline number, which you can find on the government website. Do not call any number that was included in the suspicious message itself. In addition to the main payment support, pensioners may also qualify for other forms of government support, including winter fuel payments, cold weather payments, pension credit, and free TV licenses for those over 75. Checking eligibility for these programs can provide additional help throughout the year. So this is really about looking at the full picture of what you are entitled to and making sure you are claiming absolutely everything. Many pensioners are surprised to find that there are multiple streams of support available to them that they simply did not know about. The free TV license for the over 75s is a perfect example of something that makes a real difference to people's lives, but that not everyone knows they can get. If you are a pensioner born before 1961 and want to be sure you receive all the support you are entitled to, check that your bank details with the DWP are up to date, as support payments are usually paid into the same account as your state pension. Confirm your eligibility for the winter fuel payment if you have had a recent change in residency or benefit status, and request a state pension forecast to see what your weekly rate will be after the 2026 uprate. These are 3 simple steps that could make a very meaningful difference to your finances. None of them require any specialist knowledge. They just take a little bit of time and a phone call or a visit to the gov.uk website. If you believe you qualify but have not received any support, check which benefits you currently receive. Review eligibility for pension credit. Confirm your details are up to date, and monitor official DWP communications. Many payments are processed automatically, but eligibility must be established first. The most important piece of advice we can give you is to be proactive. The system is set up to help you, but it works best when your information is accurate and when you are claiming everything you are entitled to. Do not assume that because you have not heard anything, everything is fine. Reach out, check, and confirm. To wrap everything up, the key message from today's video is that if you were born before 1961 and you are receiving your state pension, the government is putting in place real, meaningful financial support to help you through a difficult period of rising prices and increasing living costs. This support is not a loan, and it is not replacing your existing benefits. It is designed to provide immediate relief, reduce financial anxiety, and help pensioners maintain a basic standard of living without having to cut back on essential needs. The combined value of the state pension increase under the triple lock, the winter fuel payment, pension credit, and other available support can genuinely add up to hundreds of pounds of extra income each year. And every single pound of that matters when you are living on a fixed income. This support ensures that older UK citizens continue to live with dignity, comfort, and financial protection in later life. Staying informed and taking quick action is the key to unlocking these crucial benefits. So please, share this video with anyone you know who is in this age group. Check your own eligibility, make sure your details with the DWP are up to date, and do not let any of this support pass you by. You have worked hard all your life, and you deserve every bit of financial help that is available to you. If you found this video useful, please do give it a thumbs up. Leave a comment below if you have any questions, and subscribe to the channel so you never miss an important update like this one. Thank you so much for watching, and we will see you in the next video. Take care, everyone.